You are not ready for the next phase in gold and silver. And I'll tell you why in a moment. But first, happy Halloween. It is Friday, October 31st, 2025. And thank you for joining me for the weekly market wrap up. Let's get right to it. Why are you not ready for the next phase of gold and silver? Well, if you are a raging bull and you think there's only going to be a small correction for a month or so, you're not ready for it because it could last much longer than that. Let me tell you why. Let me show you a few brand new charts I've created. First, this is a gold correction analog. So we're looking at gold corrections post major breakout. So after the major breakouts in gold, this is what I'm concerned with. So we know the three major breakouts in gold's history: 2024, the cup and handle breakout, the breakout through a 13-year base. You go back, the greatest breakout of all time, that was in 1972. In addition to that, you also had the breakout in 2005, where gold broke out from a slight sideways, slight downtrend, 21-year base, over $500 an ounce. So those are the three major breakouts. So I am looking at how much gold corrected and for how long at those points and comparing it to the present. So in this analog, I'm not looking at two corrections. I'm actually looking at three. And the reason being is looking at where gold is here and now and how much I think it will correct. It's probably in between 1972 and 1973. 1972, the correction then was too little for what we're going to see now. The correction in 1973 was probably too much because gold declined 28% at that point. You might remember from another video, to equal the peak in 1973, before that 28% correction, gold would have to reach $5,800 an ounce. So it's nowhere near that. So that's why I'm using both of these, because somewhere in the middle I think is best. And then we have the 2006. And I averaged all three together. And so this thick line here, that's the average. And my view is the average is the best barometer. The average is the best line for what we should expect for gold going forward. So it's interesting because I don't think gold will repeat what any of these three corrections did, but if you put them all together, I think that's the realistic scenario, the realistic outcome. So here we are now, and we can see here in black, well, it's hard to see. You can see this black line where gold came down right here, then it rallied. I haven't sketched in today yet, but it did go down a little bit. But let's look at the average here. So the average bottoms just below 3,600 here. Correction started middle of October, and this is telling you the bottom could be in 5 months. And the other thing to keep in mind, let's look here. How long did it take from the start of the correction for gold to get back to a high and then break out? And so looking at the average, call it 6.5 months or so. So right here. So again, what does the average of these three corrections tell us? 5-month correction, and then another month and a half before it breaks to a new high. So all of this is a projection for where we could be going over the weeks and months ahead. And we'll see how things play out. We'll see how well the current correction tracks these various lines. But there's you can see a general look of how things turned out. Now, I did the same for silver. And what's interesting is, and I tweeted this, if you look at when silver starts to go parabolic historically, those moves tend to start after gold tests the 200-day moving average. But the problem with that is some of those tests did not quite touch the 200-day. They came down to the 180-day or the 150-day. So I had to make it the 150-day to include all these examples here. You can see 1973, 1978, 2006, 2010, 2020. So what we're looking at here is how does silver perform after gold tests the 150-day moving average, after a breakout, not just all the new all-time highs, but all the breakouts. So to make it more clear, gold breakout, then it corrects, tests the 150-day moving average, and then here, then we can see that this is silver's performance. Now, this requires thinking ahead in a low in silver. So if gold comes back and tests the 150-day moving average, Where might silver be? Now I put 40 here. It might be a little higher, actually. It might be 41 or 42. So this is basically, we're looking at a gold correction. The correction is almost over. Silver starts at 40 here. And this shows if silver followed each of these cases moving forward, starting beginning of January, how would silver perform? And we can see here, this is 1978. There's actually another leg here that goes like this in 1978 to 1980, but I cut it off there. So we can see here, all these cases are really bullish, except the 2006 case. And I think this is the worst fit for silver. Just there's other reasons, but I don't think the 05 to 06 period is a good fit for where silver is. Now, there's one of these that I think is a really good fit for where silver is. I'm really warming up to this possibility. And that's the 2010 period. That's this baby right here. Now, reason for that is this correction, this was after silver rallied up after the global financial crisis. It rallied up to $20, $21. Then it corrected hard for 2 months, but after 2 months, this is where it was. It rebounded back to the high, and then it consolidated for 4 months before exploding higher like that. So there's no perfect individual case scenario for silver, but I think this one is probably the best and most realistic fit out of all of these. And what does that show you? Silver can get to $130 March of 2027. But you can see where we are here and now. That's why I say people are not ready for what's coming. Obviously, this is a correction, and we have some consolidation here before you get a move like this. Okay, so now as the gold and silver corrections progress over the next month or so, we will have a better idea which of these lines is looking like the best fit case. Now, zooming into the short term, here's the market overview for the week. Daily candle charts going back 2 months, gold, silver, gold divided by the stock market, GDX, GDXJ, SIL, SILJ, the miners here. Here is TLT bonds. Here's the stock market. Remember, the stock market made a new high, pulled back a little bit, but as the stock market made a new high, precious metals were selling off. So we had a hard sell-off, as we know. Bit of a rebound here, but I don't think this is going back to new highs. This is an oversold bounce that we're seeing in gold, silver, and the miners. It's a little interesting. I do like that silver right here is a little bit stronger than gold. Gold only one bullish candle, whereas silver, you do have 3 white candles. So that's interesting, but we're clearly still in a correction. Now let's zoom in and focus more on gold and silver, the daily charts. Here's gold right here, the 200-day moving average. Silver right here, the 200-day moving average. I've sketched in here an estimate of how these could progress. Gold here, if we look at the price action, again, oversold here, kind of a weak bounce so far, closed just below 4,000. This is going to be resistance here. Call it low 4,100s, and then also right here. So the high today, 40.45. So call it 40.50. So you have initial resistance here, a little more resistance here. So gold could rally a bit more, pop up a little higher. Then you could see more selling come in, and maybe it comes back down like this. But bigger picture, this is what I'm looking for. 3,700 a test of that. That's about a 16% decline. Look how close gold came already. So not that much more selling to get down to this point. Now, silver, this is what I'm looking at here, right around 42. I think this is a strong support. Silver came down to the 44s, has rallied back up, nearly touched 49 today. But I'm looking at the price action, and you have clear resistance here at 51, and then right here, just below 50. So 50 is going to be resistance for silver, 51 in the short term. So that's where we are. Let's look at the weekly chart, and I've sketched in here the strong support lines. Should be 3,600 for gold. And as I said, it could make a low a little bit higher. So 3,650, 3,700. With respect to silver, this is where you're going to find initial strong support, I think, right around 42. So that's where we are for gold and silver. Before we get to the stocks, let me take a moment to tell you about our premium service, the Daily Gold Premium. And first, I would like to thank each and every one of you who've signed up. Really appreciate you and your business. And what we are looking to do is find a combination of what are the best junior gold and silver companies, And what are the ones that have the most upside potential? We're looking for 3x to 5x upside potential in these stocks. And we're looking to buy quality companies at good values, companies that have quality assets, and stocks that we can buy and hold for the next couple of years. And if they go up too much, we trim them. If they don't perform as well, we cut them and move the money into something else. We keep things really simple. Again, looking to buy the best quality fundamental companies that have the most upside. That is our mandate, and would love to have you join us at the Daily Gold Premium. Head on over to thedailygold.com/premium. I promise you, you won't find a better value for your money in the gold and silver newsletter space. Thank you so much. And moving on, let's wrap things up here with the stocks. So these are the weekly candles for silver stocks, SILJ here. SIL here at the top, SILJ at the bottom. And one thing I do want to note about the stocks is they've been showing a little bit more strength in the metals. So short term, that is a good sign. And these are good or decent weekly candles, I should say, for the silver stocks. But these are just the kind of bearish candles that are marking a significant top. So we don't want to get bullish until the silver stocks fall somewhere in this area down here, potentially right here. So they have put in a short-term bottom. They could rally for a little bit, but we have to be wary because some point in the next few weeks, we could get another round of selling, and then it takes these lower and closer to those really strong buy targets, as I mentioned. Now, same thing with the gold stocks. Again, decent candles this week. I like these candles, but when you have these types of candles, this marks a significant top. This is not going to be a 2-week correction. So that being said, that's all for this week. Hope you had a good week. Hope you have a great Halloween and an even better weekend ahead. Thank you so much for tuning in. I appreciate you and your support. Leave a comment. Let me know what you think about the correction, how long it might last, how low we might go. We'll love to hear from you. Hope you have a great weekend. And by the way, I will be in New Orleans at the New Orleans Investment Conference this weekend into next week. So come and say hi. We'd love to see you there. Thank you so much for your support. I'll see you guys at the conference or in the next video. Thank you.